Hello, this is Tom Platt with my bi-weekly update on precious metals. Man, what a time it's been. And as I said 2 weeks ago, we get probably 2/3 of the questions we get are about silver. And there's one thing about being a crusty old pro. When you've been around this business 44 years, you see it all. And certainly this is different feeling because of the coronavirus than we've seen in the past two times when silver ran way up, first in 1977 to 1980 when we saw it go from $3 or $4 up to 50 under the bunker hunt, the Hunt brothers trying to corner the silver market, and then the 2008 financial crisis coming out of that, and then 3 years later, silver had gone from $9 to $48. So here we are again on third verse, same song. But it certainly has been disappointing, and certainly most of our questions ask that. So what I want to do before we get into some of the details is just look. The reason you are interested is going back to March of 2019, 13 months ago. Silver was sitting there at $15.10, and gold hit $1,300 on the way up. We looked at it that day, and the ratio was 86 to 1. Gold was 86 times more valuable than silver. Now, 13 months later, gold is now at $17.10. It's gone up 33%, and silver's at $15.25. It's gone up 1%. One's gone up 33, one's gone up 1, and people are scratching their head. Well, there's quite a few reasons why that is. We'll start on the gold side. Central banks, Russia, China in particular, are buying gold every month. They anticipate a gold-backed currency. Not only do they anticipate it, they probably will be the country that will back it and come out. And as I've said many times, I don't know what percentage of currency will be backed by gold, but it may not be 100%. It probably won't be. But the point is, who in the world would keep their money in US dollars that are being printed and dropped out of helicopters like they were in 2008? We are flushing the economy with paper-created fiat currency, money by decree. And it's in the trillions of dollars and growing. So gold is money. So because of everything going on, people are following central banks, knowing central banks are not going to buy gold if they don't know something you don't know. But what it's done is affected silver, because silver is an industrial metal first. It's a financial barter metal second. So what we have going on right now is we have a ratio that has climbed to 112 this morning. As I filmed this on April 29th, 2020, it's gone from 86 up to 112, and people are scratching their heads saying, when is this thing going to explode? I can tell you that as a dealer, not one time have I ever seen physical silver as tight as it is right now. I mean, we're on a month to 6 week delivery, but we're able to sell it. We have the funds to put up to back silver that's being made, and we're able to deliver it, and we are delivering it 3 and 4 weeks, and hopefully stay in that same pattern. But you've got to look at silver also. If the coronavirus pushes us into a recession-depression, then industrial demand for silver is going to go down for high definition televisions and cell phones, electric cars, solar panels, all these things that are going to eventually drive silver to crazy numbers may be delayed further. So what should you do? You should be buying silver every chance you get. If you buy 20 or 30 or 40 or 50 ounces a month, just keep buying it. Because what else can you buy that literally has no downside risk? And I mean literally no downside risk based on the mining cost. Plus you have the metal. It's not a piece of paper. The bank can't bail it in. That's another problem we need to talk about in detail later. But for the ones of you who don't know, every penny you have in a bank is not yours. It belongs to the bank. You're a creditor, but if they want to keep it, you have no legal recourse against them. No, I'm not crazy. Check it out for yourself. The money you have in the bank. And for the ones of you who have over 250,000 laying around, it's going to be there for a while, you are making a mistake if you're not buying physical precious metals, gold and silver, store them in one of our warehouse deals, the lowest in the world. And when you're ready to sell it, we'll send you a piece of paper, you'll sign it. So it's like having your own ETF, having your own liquidity fund. I've had 2 people put in over $1 million just for this one purpose, to get it out of the banking system, just in the last 2 weeks. And they're saying, I care less if I lose 2%. I don't want to lose 40 or 50% like they did in Cyprus 5 or 6 years ago. We're going to have metal back in our money. And I'm doing the same thing. I'm not leaving big amounts in my checking account and credit and brokerage accounts. I'm putting them in a warehouse, gold and silver, where I can sign it over and turn it into cash if I need it to purchase something else. So back to the silver. What can you do? Have patience. Because once it moves, it's not like gold. It moves $1 or $2 a day, and it's 5 or 10% a day. I've been through it in 77 to 80, again in 2008 to 2012. And this next one is going to be the grandfather of all of them. So if we keep printing money, we're going to have inflation. Great for silver. The economy will come back, even though it won't be real growth. It'll be generated by creation of money. Good for silver. Very positive for silver. So then when the electric car mandate comes in China in 2024, where if you don't drive an electric car, you got to pay a big penalty if you're driving a gasoline-driven car. So yes, it is bad, and it's hard to keep your patience, but that's what you've got to do, because if you try to catch it right before it goes up, you're not going to be able to do it. Because what happens is the wholesalers' inventories go away. We've seen that with 7 different wholesalers where their inventories got wiped out in 3 days. Everything they had. And then we had clients that we were able to do it, but then the premiums started going up. And they're still up there, but they're worth it, because even buying silver rounds today at $3.50 over spot, you're still talking about $18. I mean, that's the fair market of silver right now. So I just advise you to do it, but you got to realize it may not be tomorrow for silver to pop. You may see the gold silver ratio get to 120 or 125 if the central banks keep buying gold the way they're buying it. But what you've got to ask yourself, are you a good steward of God's money that He's entrusted you with, letting it sit in the bank, first above 250,000, and then below that? The FDIC hardly has, they only have 1% assets to cover. So that doesn't mean anything. So you've got to try to use your brain while you've got time to look at the different options when you're holding big money. And then certainly the ones that are in IRAs. We have never in 44 years seen, of course, till 1985, we couldn't even put gold and silvers, but since 1985, the last 35 years, I've never seen the situation now where all the baby boomers are rolling out, taking their 401ks and bringing them out and putting in self-directed IRAs for stocks and bonds and a self-directed IRA for precious metals. You have 2. and we'll work with you as a representative and as your broker. We can't be your custodian, but if you'll call Dan or I at 800-247-2812, that's 800-247-2812, we'll give you some custodians that we work with, and you can pick the one you want. But I'm telling you, you need to get that paperwork done, and you can do it fairly quickly. And for the ones of you that are in a 401k, we probably had, I don't know, 6, 7 in the last 2 weeks that borrowed money from their 401k personally, and they got the best of both worlds. They're buying metals with that money, and when they sell the metals and repay the interest to their own 401k, they pay themselves interest and made the money, we think, when gold and silver go up a lot higher than they are right now. So I hope y'all caught Bank of America. Here's one of the money center banks of the world saying gold will be $3,000 an ounce in the next 18 months. We're seeing Credit Suisse and others in Switzerland calling for 2,000 this year and 3,000 to 3,500 next year, when all this fiat currency gets in there and the velocity of money starts going. And then it's really like a print machine, because you put set aside in the Monetary Control Act, so it gives every dollar about 6.5 times velocity. So then the banks are printing money by just getting people to borrow money. So you need to get in there and realize this, and there's just incredible people with credibility talking 2,000 to huge numbers in gold. And the same thing in silver, but certainly a little bit behind down the time frame. So hopefully we've answered most of your questions on silver. Dan and I are always willing to talk to you. You can reach us at 800-247-2812. And for the ones of you that are not familiar with our storage program, we have the cheapest in the world. We can't talk about the rate on this show, but if you'll call us, we'll teach you how to store it. When you're ready to sell it, you just sign a piece of paper, and we have it moved to whoever whose account we sell it at the warehouse, and then you get your check. So, like I said, you need to be holding liquid assets, and we've talked about last 2 weeks ago, be sure it's not in commercial paper. Now, I'm not saying commercial paper is going down, but if you're going to keep it in a trade brokerage firm, ask for the U.S. Treasury money market fund, not the traditional other money market funds that are in commercial paper. So hope we've answered your questions. Keep the questions coming. Just be very studious about what you're doing. Protect what you've earned and be the best steward you can. Till 2 weeks from now, with the update in precious metals, this is Tom Cloud signing out.